It's a great pleasure to welcome back to What's Next, Investec, and we are going to be talking about business in this episode. Hazel Banach, he is the head of product for Investec's business lending, and Dr. Greg Cline, who's the head of corporate accounts at Investec Business. It's wonderful to have you both with us, and I go back a long way with you, Dr. Cline, and really great to see you and to meet you, Hazel. Welcome, and nice to have you both.
Thanks for having us, Aki.
Thank you.
It's a great pleasure. Now, the business is such an important part of our economy, global economy. It's what really helps the country grow. And the mid-market is such a critical area when it comes to business banking. And I, as a business owner, can relate to this. And I have my own frustrations when it comes to business banking as a small business owner. But let me ask you, Hazel, what opportunities and challenges do these businesses grapple with from a business banking perspective? I'd love to hear from your perspective, the bank's perspective.
Yeah, Aki. So I think, with a nimbleness and adaptability that's quite distinct from the larger corporates, the SA mid-market is a vital driver of our continued economic growth, and as a result, a segment that the banking industry is looking to actively support and grow. So it is currently a very highly competitive environment. So for the right businesses, they really have the ability to be discerning about who they bank with. For many, though, the challenges at this commercial space, they often form part of a number, are confronted by banking jargon, and aren't necessarily aware of what the right solution could be for their business, which is frustrating when what you're trying to do is run a business, particularly in a tough economic climate. From a banking partner, businesses should seek the ability to fund and run their operations with ease, the ability to take hold of those opportunities as they present, to invest in the equipment that they need, and then to have the right transactional platforms that give them the access and the control that they want on their terms, and obviously the ability to optimize their liquidity. So key to realizing these opportunities and circumventing the challenges is really about finding the right partner that journeys with you, that speaks your language.
Well, listen, this is music to my ears, because what I'm hearing from you is about a partnership and being actually more human. And that's kind of the one frustration I have. And I guess it's all got to do with the size of business. And yes, it's a very, very complex market that's out there. It's very competitive. But, I see my bank as a partner, and I would love to have that partnership, in inverted commas, where bringing out the human side, and a bank that better understands me as a customer and helps me take away the friction. So I'm hearing a lot of that from you, which is fantastic. But working capital is really critical. When you look at working capital, it's what's needed to grow your business, and it's really a vital part of any business, especially those businesses in the mid-market that are establishing themselves and looking to grow or overcome those short-term financial challenges. What approach do you take when it comes to this particular sector?
Well, Aki, it's 100% correct. Working capital is that lifeblood of a business. And business lending is highly commoditized, I suppose, speaking to what I was saying earlier about being a very competitive market. So it's not actually just about what products we have to offer. It's about that partnering that you so rightly mentioned and how we solution for our clients. As a start, we know and appreciate that no one business is the same. Our philosophy is to walk the journey with them. We are people engaged with people, talking with owners and operators of our client businesses, and taking the time to really better understand what they've created, where the opportunities are, what are the constraints that exist and where, and jointly finding the right funding solutions that we can become that facilitator of their continued growth. As an example, we enabled one of our clients to really reduce the reliance that they had on a single supplier by giving them the time to test and secure other sources of supply. We did that by pre-funding 2 years worth of stock for them, which really locked in that certainty of their supply and provided them with that breathing room. But it was something that we were only able to do because of our understanding of their business. It meant that we could be proactive, that we could identify those deal risks early on, and that we were able to work with them and with their supplier to be able to guide on that deal structure and the mitigants that needed to be put in place. Also by stepping in alongside our clients, we're in the same boat as them. We're susceptible to an ever-changing and challenging operating environment. We understand the realities that they face. And when dealing with people, our clients have the ability to have the right conversation. It's easier to explain any change in business results, be it good or bad, like the impact of subdued consumer spending or the fact that they could experience an uptick in the sales that they derive by introducing different product lines or by being able to diversify their supply base, to my example earlier. So, be it good or bad, we work with our clients, knowing that a holistic view of their credit risk is necessary, marrying this to the insights that we gain across our client base, which is highly varied, different sized businesses, different levels of maturity, across different industries. And that gives us experience to also be able to link in with what we're seeing happen in related industries, so that we can ensure our lending works both for our clients, but that we can be that continued support to them.
Yeah, absolutely fascinating. The partnership you talk about is just coming through over and over again. So I want to bring you in, Greg, and I want to tell you about, well, not tell you, but I did have an experience where I tried to import some goods, a few months ago, and boy, oh boy, the complexities that I had to endure, and the friction and that sort of thing. And I thought to myself, you know what, I shouldn't be, going through this. And I find it very interesting that Investec simplifies imports by integrating logistics and trade finance into one bespoke solution. So it's unusual for a bank to have a fully integrated trade and import solution managed in-house. Can you tell me a little bit more about this offering, please?
Absolutely. So, Aki, you are 100% on the button. We are quite unique in that we are a bank that offer logistics services. And I think importing logistics supply chain, this is a complex business, and you're dealing with multiple parties in multiple currency. And so just to contextualize it, if a business is importing goods, like you mentioned, you're dealing with an overseas supplier. You're booking out forex, we need to pay them in a foreign currency. You're placing an order. You're waiting for goods to be made ready. Those goods need to be put onto a ship or onto an aircraft. They're brought through to South Africa. You're dealing with a clearing and forwarding agent to move the goods through customs. Once those are cleared, they need to be transported to a warehouse. And then once those are offloaded, those goods may be sold directly or beneficiated to some extent, sold to your end customers, and then you're giving your customers terms to pay you back. So that cash flow cycle is quite lengthy, from the time you're placing the order on your supplier right through to when your clients or your customers pay you back. That could be anything in excess of 100 days, quite often. So what Investec offer is we ring-fence facility exclusively for imports. And what we do as Investec Business Banking is that we will take care of the forex, we'll pay away the foreign supplier portion, we will make sure the goods are put into a ship, we'll clear the customs, we've got a license to facilitate imports and to clear goods. We will then make sure that the goods are transported, delivered to a first nominated warehouse. And once the goods are delivered, we will then give one rand-based invoice with terms to settle the bank, similar to or to match the terms that your business is providing to your customers. So essentially, we're looking to match the cash flow cycle. And instead of having multiple parties to deal with, as a business, you're dealing with one counterparty, that being Investec. So it's not only for your financial aspects of the supply chain, but also the physical and logistical aspects as well.
Wow, that's amazing. And like, for example, I had to apply to SARS to get, an import and export, license and that sort of thing. So would that fall under your particular one? Is that what you take care of? So I don't have to have all that red tape, which made me very gray throughout this whole process. And of course, dealing with, clearing agents and forex and I'm just so glad that I can have someone like Investec take care of all that for me.
Yeah. So, Aki, the complexity lies in that there obviously are issues sitting with customs, and there are issues that are sitting with bank. And so where there are certain instances, such as importing on your own importer's license, while businesses need to have their own importer's license, so we won't import on the bank's code. In some exceptional circumstance, we will, but we will assist businesses in applying for this importer's code. And I think similarly,
Okay.
when you've got issues with customs, so there might be multiple stoppages, or we've got some type of value determination, or there's a tariff code that is in dispute. So we will sit alongside businesses. We're meeting with customs on a regular basis. We've got dedicated teams of ex-customs staff who are professionals with years of experience and understand how to tariff goods correctly, how to raise objections or motivations through to the correct department, and to get goods cleared. So certainly where there may be instances where the bank can't take all obligations onto its own, we will assist businesses, making sure that we can get those goods cleared through customs timeously and delivered as and when is needed.
Gee, that's fantastic. It's a great service, and it's very, very helpful to know this. Hazel, with the interest rates being so high at the moment, liquidity is always an issue when this kind of thing happens. But I get a sense that there is a slight easing coming our way, and hopefully in the not too distant future, we're going to see interest rates reduced. But has the view on debt changed? And what funding options can businesses look at to support their growth strategies, especially when it comes to a tough market? Because let's be honest, it is a tough market out there at the moment.
It is tough. And I think in terms of those interest rates reducing, we probably only got to look at seeing that happen into the new year, given where inflation still currently sits. I think even amongst all of that, though, debt still does remain one of the cheapest ways of funding a business, as it doesn't actually involve giving away any of your equity. So looking to your assets as a business, as the collateral, and placing value on the cash generation capability of having debt into your business is what businesses should really take into consideration versus fixating on the cost, because it ensures that they have access to the liquidity when they need it. In terms of looking for funding, businesses really should have the right funding for them at the right time. So a little bit of obviously what's Greg spoken about in terms of the import and trade finance solution. It's about having a combination of funding that can leverage and generate the asset that they fund. So with stock, you can use that to obviously get funding for that purchase of the stock, which in turn creates more value on your balance sheet to borrow against. And it's about having that with a combination of, then I suppose, what we'd call more vanilla working capital type facilities, like an overdraft, that really enables you to have the right funding at the right time to optimize your value chain and provide that headroom for growth. So, I spoke about the fact that trade finance, as an example, makes it easier to look at leveraging your inventory. And so particularly for your manufacturers and wholesalers, it gives them the ability to more efficiently and effectively manage and fund those supply chains from the purchase through to the sale. And obviously, as Greg was giving an indication of, that can be a hugely long lead time, up to 100 days in some instances. So it releases very early in that operating cycle the working capital that would be otherwise tied up in that operating cycle. We often liken using the whole thing with trade combined with the logistics, the power of being able to have that funding with the service element. It really truly allows us to be able to be partners to our client businesses. So much so that we look to the way that those containers are filled with product. It's not actually filled with product in our mind. That's filled with the livelihood of the people that work in those businesses, the ability to send their kids to school. And so that's really about speaking to how we look to see where we can look to the right funding to put into those businesses that they're able to make sure that they have that continued sustainability of their business, but also that room for growth. There's also views to look at the value that debtors carry for a business. So by unlocking the value that you have in your debtors book, you generate a sale, you give your clients terms, there's value to hold in that client base. And so our borrowing-based funding really enables them to be bridging that gap between that sale and when that cash comes back into their business. And asset finance is something that we often use when we're looking to purchase the capital equipment that businesses need to be more income generative, that actual asset underpinning the lend itself. And those businesses that really want to be able to invest to grow, we look at leverage finance that really enables our clients to implement on the right transactions. So appropriate funding structure should really change the very nature of a business's outlook. with our clients having those additional tools to work with, to expand reach, upgrade infrastructure, or just have that working capital to redeploy into other areas for growth.
So, Greg, let me bring you back in on the backdrop of what Hazel has just been talking about. And obviously, we know it's a very complex environment when it comes to importing. Forex is also, with the volatility of the rand, for example, if you get it wrong, you could land up losing a lot of money. And this is where forward cover and all those kind of things come into play. So how can businesses navigate the complexities of import while still ensuring they're getting those competitive rates and cost savings?
Yeah, absolutely. So I think, actually, Investec funds in excess of 20 billion rands worth of imports of goods a year into South Africa. It's still a drop in the ocean compared to the 1.6 trillion rand worth of goods that are imported as a whole on an annual basis. But what this does do is it provides our clients with the ability to leverage off our economies of scale. So what's happening is that Investec is negotiating with the shipping lines. We've got minimum order volumes that we're able to guarantee to the shipping lines, and we obviously get better rates through those type of negotiations. And also we're able to negotiate 2 or 3 shipping lines per port, coming in from origin. So when you're shipping goods in from overseas, if you're missing the stack for a Monday sailing, then we can at least look at getting those goods onto a Wednesday, Thursday, or Friday sailing so that we can ensure those goods can still arrive on time. You spoke to leveraging or talking to de-risking your forex exposure. Well, on our client's mandate, we can look to taking forward cover. So you can hedge your forex risk. If their mandate is to look at taking out at spot, or we can accommodate that. And we can look at options if they want to get even more sophisticated. But what it does do is that it creates optionality. And we are providing our clients with the options and the decision-making power to decide when they want to take forward cover, who they want to deal with in terms of their shipping lines. We've also negotiated better rates with our transporters. And at the same time, because they're dealing with Investec as their commercial partner, the way that we look to stock means that we understand the cyclical nature of those businesses. A business that is trading in high fashion retail apparel, for example, we expect them to have a peak in seasonal trade sitting around Christmas time or Black Friday and Easter, as opposed to businesses that are in manufacturing. So we understand when the facility is going to need a temporary increase. We understand when the rand weakens, that again, purchasing dollars may need an additional facility to accommodate those purchases. And so understanding the nature of the stock, the nature of the business is essential to having the right partner so that you can remove as much risk as possible out of the supply chain. I think to Hazel's point, one of the key differences that Investec offers is that we place value on the stock. So as a balance sheet lender, we look to stock and debtors, and typically banks don't want to get involved in stock. Whereas we'll look to see, well, if you've got R1 million of stock that's on the water, now that's goods in transit, that's sitting on a business's balance sheet. We want to place value on that, and we want to lend against that. And what that means is that we typically, as Investec Business Banking, will offer 20 to 30% more of facility compared to other banks because we take the stock into account. I think that, looking at the debtors book, all banks fund debtors. But again, understanding the nature of the debtors book, you might have a blue chip debtors that's decided to stretch you 90 days of payment terms. If it's a blue chip debtors, Investec will consider that as part of the debtors book that they wish to fund. So it's important to be able to sit down with your partner, with your bank, and understand, how do you get the most facility that you need in order to grow? Because to the point that Hazel made earlier, what we're seeing, particularly in mid-market, is that growing businesses have all their capital tied up in inventory. It's either on a boat or in a warehouse. And if the more you're able to unlock, it means the more stock you're able to fund. And the more stock you can fund, the more debtors you can create. And that means that there's more to the bottom line.
Wow, that's really understanding a business and as a bank, truly understanding how a business operates and what they need and allowing that flexibility. And ultimately, better experiences are essential today, Hazel. I mean, businesses need and want more from their banking partners, as to what Greg was just alluding to. How are you driving this with the mid-market from a lending perspective? And Greg touched on some points that, even that 30%, knowing how your business is operating to give you that flexibility is very important for businesses.
It's extremely important. And I think, we have spoken about it extensively, but to give you a reason as to why that value of partnership, I read somewhere, and it has just stuck with me, that more than 70% of business clients consider relationship to be the most influential factor when they select a bank and when they decide on lending. And that's pivotal in terms of how the human touch remains so significant in an era when there is such rapid digital transformation. And it's something that as Investec, we've embodied from the onset. We are high touch enabled by high tech. We seek to build those relationships. We seek to understand the specific needs of our clients, and so that we can be a commercial partner to them, looking at viable solutions and ensuring a personalized experience. But as a segue into that, it's also about leveraging tech and digital capabilities. We provide online, real-time access to the full range of our business banking offerings. So under one roof, forex, cash investments, the access to your loan information, and then how that links with your transactional capabilities, including the ability to track your logistics and cost out your import orders. We are also proactively looking at managing our client insights so that we can better anticipate what their future lending needs might be. And we do that because of our deeply entrenched understanding of their business, that we can look to provide them with that funding that they need before they've actually even asked for it, and sometimes before they've even known to ask for it. It's a lot of what Greg was saying about the fact that because we are these balance sheet lenders, we can fund against the assets that then become generative of additional funding capability because that asset base has grown with having us alongside for the journey. And within that, we freely share our industry expertise, providing insights and guidance to our clients from a macroeconomic indicators right through to, what's happening on specific freight trading lanes and the realities of our global supply chain crisis. And for clients, we know that time is money, and that what they need to be able to have to run their business is the knowledge that they've got a partner backing their ability to run that. And it's about those efficiencies. So we work with our clients to ensure that we are best placed to get the approvals that are needed or to make a plan in the shortest possible time, obviously relative to deal complexity, but it's always about keeping them in the loop, being able to have transparent conversations around what is the relative ease or challenges of getting stuff done, being able to ensure that clients are fully updated in terms of what we're doing for them, whether it's a deal that we're trying to obviously get through credit, or whether it's their orders that are stuck in port that we need to be able to get hold of so that we can make those deliveries so that they can obviously supply to their clients and have that onward business trajectory. And that's, I think that really is about being a banking partner, and partner being the operative word.
No, you're spot on. I mean, that's exactly what's coming through over and over, is that partnership and really, truly understanding how a customer's business is operating and what they need to unlock and leverage and unlock value in their organization, and understanding, Greg, those facilities available, and more importantly, when the time is right, can also make a massive difference. I mean, we dived in just a little bit earlier in terms of, currency fluctuations, etc. If we dive in a little bit deeper into that, how do you actually work with businesses to unlock their funds as well as their potential?
So actually, I think, it comes down to two key elements. One is around people and relationships, and the second is around technology. And around the people aspect of it, I think Investec is leaps ahead of other banks. Being an Investec client means that you can pick up the phone and speak to someone at the other end regarding your business. The amount of times that we have requests to bring increases into credit and get a credit decision answer back timelessly within a week or within 2 weeks. It's happening every day. And what we're seeing is that there's an urgency with business that often isn't fully understood by the banks. And when it comes to the opportunities to either take advantage of making a purchase overseas of a job lot, or if it's about an urgent working capital need, the ability to have a high level of service and getting a credit decision, implementing that, activating a facility increase, and allowing customers to trade and having access to that working capital is crucial, because business goes through peaks and troughs. So speaking to the cyclical nature of businesses and understanding what that means within various industries, sometimes we are as proactive, going to credit before the client or customers even realize that they're going to need an increase in facility. We'll look to a 20% increase on their current facility limits to accommodate additional purchasing that we understand is going to be aligned with increased seasonal trade. Other times what we're seeing is that clients want the ability to place additional value on stock that they're purchasing. And there's different types of stock. Some stock is easily tradable. Other stock is highly specialized. And so you need a team of people who take an interest, are going to come to your business, are going to walk the floor, are going to understand the nature of your stock. We've seen various trends in business, such as solar and renewable energy. I mean, these are trends in the last 2 years that have walked alongside the economy. And so businesses are investing in renewable energy and solar technologies, and the ability to fund these through the likes of an asset finance type of purchase, or using their working capital, or depending what is appropriate to what's available to them. But having the right partner means being able to sit down and be able to speak to someone and understand, how do you restructure your debt or access additional facility so that you can accommodate growth in the business. I think from a technology standpoint, and Hazel's touched on this, we've built systems, bank-grade systems. We spent hundreds of millions of rands that allow our clients to apply business insights to the supply chain, to understand, build up a catalog of all goods that have been imported and what are the cost inputs to those goods. So from a landed cost basis, understanding how much did you pay your supplier, what was the exchange rate at the time, what were your freight and clearing charges, what was the insurance, what was the transport, all of these cost inputs, they all change over time. But at the end of the day, it means that there's a landed cost, that the goods need to be delivered to your end customer, and there's a retail selling price, and there's a margin that needs to be protected. So from a business perspective, understanding and having the business insights into all goods that you've imported into the country is critical. And similarly, we've invested quite heavily in data engineers and BI and soon to be AI, self-learning systems that can add value back into businesses so that they can analyze their supply chains and understand where are the benefits that they can unlock, because you're dealing with multiple parties across multiple oceans, and there certainly are benefits to be realized, but you've got to get on top of understanding such a high complex volume of information. And so what Investec does well is that we've got people that are sitting, happy to engage, happy to go out to businesses. We've got access to systems, and it's all high tech and quite impressive. But I think at the end of the day, business really is about relationships. And I can tell you over the thousands of businesses that we are proud to call our clients, we have a relationship with each and every one of them. And so we understand sometimes things happen beyond our control. Shareholders may get sick. You may find that there are customers of your business that are in trouble and are slow payers. And so the ability to pick up the phone and say, look, I need to extend an invoice by 30, 60 days. I need more facility because I still need to purchase, but I've got customers that are slow paying. Having someone who's commercially, on the same page as you and understands the nature of your business is critical to continuing this relationship and growing.
Wow, it's fascinating. And I guess as well is that the knowledge that you guys have gathered over time, dealing with all of these businesses, also helps you better assess risk that's involved, and you can share that information with your clients. So you better understand the different segments in the import-export market, and you can share that expertise with your clients, and they in turn get even more value that they can unlock by having a bank like Investec as a partner. Let me ask you both this question on the backdrop of what we've been talking about. Talking about importing and exporting, et cetera, et cetera, et cetera. What advice do you guys have in finding the right lending and import partner as a business in this space that we're talking about, what advice do you have for businesses that are watching this, that are saying, hey, I can relate to what both Hazel and Dr. Cline are saying? What advice do you have for those kind of businesses? Let's start with you, Hazel.
For me, at the core is about making sure that you're dealing with people, and people that you know you can build a relationship with and who are as vested in your business as you are. And then it's about building that relationship so that you know you have their backing. It's that proactive instead of being reactive, so that you have that backing to take hold of those opportunities that might be on the horizon, or to be able to better manage those pinches in cash flow, like Greg was speaking about, that extension of, when you pay us back because you've got those challenges in your client base paying you. And I think, all too often business owners speak of that frustration of not being able to speak directly with their relationship manager. So don't settle. You should expect a private banking experience for your business.
Greg, what's your advice?
So I think, my first thoughts, and it was before Hazel started her response, is just, my advice would be to ensure that you've got a good relationship with your bank. So, and what that means is not in terms of pleasantries, but have your bank come out, let them understand the business, let them show to you that they understand the nature of the industry, the nature of the stock. I think that if your banking partner hasn't walked the floor of your warehouse and understood how your stock moves and the nature of your stock, I think you're doing yourself a disservice, because it's easy to get money from a bank when times are good. I think when your customers are stretching you, or when the economy hits a little bit of a downturn, it's then when you really need the support. And to get that support, your bank has got to demonstrate a commercial understanding of your industry, the ability to place value on the stock, the ability to renegotiate settlement terms, the ability to understand how you should be treating your suppliers, and the extent and depth of information that's available around not only your supply chain, but around all your banking products. It's easy to offer up banking products at a low cost. I think that if this was a low-cost game, well, you wouldn't need people. You could go onto a website and you could select the cheapest rate, but really, what you want is you need a bank that will show the flexibility and the agility to come back to you quickly with credit decisions. They need to be commercial, and they need to show that they've understood and dealt with businesses such as yours in this industry. And you need to share your experience, share your lived experience when things didn't go so well. What was your experience with your current bank? What did you expect? What is to be expected out of the relationship? And so there's a much bigger conversation to be had with your bank. And just make sure you're taking on the right type of people. At the end of the day, you need to have a partnership with people that are going to support you.
Dr. Greg Cline, Head of Corporate Accounts at Investec Business, and Hazel Banach, who is the Head of Product for Investec's Business Lending. Thank you so much for your time this morning, guys, and sharing those insights. A really, really important part of any business, and really highlighting the importance of relationships and truly understanding what your business is all about. Thank you so much for joining us on behalf of Investec.